You would think that the markets would be embracing optimism around the potential for a trade deal, but that's not necessarily the case. The markets really enjoyed the situation we've had running into this. We've had a really strong domestic economy. We've had cooling global headwinds because of these trade concerns, especially coming out of China. So from the consumer's perspective, the United States, which drives our U.S. economy, it's been a great situation. We've had record low mortgage rates and really low energy prices, both of which would change if we had a trade deal. So consumers like the way they have it right now. Business, on the other hand, it's a little bit of a different story. Business sentiment has been a little bit softer because of uncertainty around trade. So business would really benefit from a trade deal. Consumers, maybe not so much. They've had a pretty good condition. And Neil, I think from the stock market perspective, you're really talking more about rotation. If you think about what's led this market the first half of the year, it's been the dividend story, right? It's been REITs, it's been utilities, it's been defensives, it's been staples. If we shift the narrative in the second half of the year and we do get a trade deal, it becomes a global growth story, which is arguably a lot more exciting. That's really where we want to be, but we're okay where we are as long as we have strong domestic growth behind us. At the end of the day, going into the presidential election, we need our trading partners to do well because we want to sell them goods and services. We know international stocks are the cheapest they've been to domestic stocks in 15 years. So there's lots of opportunity outside of the U.S. Global GDP growth outside of the U.S. is where the potential is, and U.S. companies can really benefit from that. So I think we really need to shift that narrative. Of course, we want to see the domestic story strong, but we can only push that so far. And I think we've had the benefits of a strong domestic economy without the rest of the world doing their share. And I think now we want to shift. Imagine the trading partners going on in the emerging markets if this China deal really does happen. How strong that would be. Europe would really benefit, and we do a lot of trade with Europe. So I think there's a lot of ways to look at this. Maybe the way we've looked at the first half of the year has been that rate cut story. That's not necessarily the way we should look at it for the second half of the year. If we can pull this deal off, it's really going to be good for the middle class in this country, and I think that's what's really critical here, and that's what we need to keep our focus on as a narrative for the second half of the year.